Welcome back. You're still tuned into Trading Hour. For the market, we're seeing a 70-point gain right now. So it is definitely moving higher after that, initial dip that we got. The mid-cap index is a little bit, underperforming a tad bit today. So it's around 50 points in the green, but the banks are looking strong. So 350 points higher there. Let's actually talk about where the markets could move from here. Prateek Parekh joins us, equity strategist at Nuvama Group. Prateek, thanks a lot for taking out the time and speaking to us today. Just as we were talking about those all-time high levels, we've started to face a bit of resistance there. Take us through how you think it's likely to move from here. Also considering that, most of the earnings are out. I know we have the large ones today from SBI and ITC, but considering most of those are out, how are you also reading this season?
Yeah. Thanks, Pavitra, for having me over. I think this quarter results, have been a mixed bag of sorts. We've had some bright spots and some dampeners as well. I think one big bright spot in this quarter was on the margins front, where we have seen most of the domestic consumer companies reporting very healthy margins. I think this is largely owing to the supply shock that the economy was going through over the last 3-6 months in terms of higher crude oil prices, higher metal prices, those going away. So to that extent, there is clearly a margin relief that we can see, and that is positive, and that may perhaps continue for some more time for some sectors. But where I think there are some concerns emerging is clearly on the exports front, where IT companies I think have used the word uncertain probably the most number of times in many quarters that we have had. Chemical companies as well, are going through their own set of challenges. And finally, on financials as well, a sector which was seeing very large earnings upgrades until recently. This quarter, the earnings upgrades are somewhat missing over there. So overall, from an earnings season perspective, if I have to look at it, I think margins are good. The commentary on the capex part is encouraging, but I think the outlook on the exports and commodities remains muted, and on banks as well, the very large tailwinds that we had seen on the upgrade cycle seems to be largely behind us of sorts per se, Pavitra.
Okay. Prateek, hi, morning. Can you talk about your bullish call on auto? Now, autos have started doing well. The numbers are looking up. Tires particularly had a solid Q4 quarter. What's the big picture when it comes to investing in auto, say, for the medium term?
Yeah. So, thanks, Rima. See, I think autos in general are a very early cycle plays. I mean, they are rate sensitives in the past, and they do respond to business cycle, clearly one of the earlier responders of sorts per se. But what has happened, in last 4-5 years is that autos has had its own set of challenges. It started first with the ILFS crisis, which led to very large funding squeeze. Then you had this BS4 to BS6 transition norms. Then you had chip shortages, high input inflation, so on and so forth. So for almost nearly 5 years, the auto sector earnings has been very weak, despite economy doing somewhat better of sorts per se. But auto, I think, is one space where I think we finally see things moving in the right direction. On the demand front, even if the overall economy slows down, and we are seeing some pockets of consumption slowing down, auto demand should be somewhat better off owing to the pent up that is there as chip shortage issues resolved, and even on the rural front, replacement demand itself should help two-wheeler sales of sorts per se. And second, with all the large technology transitions being behind, and you have a favorable benefit of falling input prices, I think auto is one space where I think the next 2-3 year earnings outlooks perhaps looks to be one of the best. And that's why, given our valuations we are quite overweight the domestic auto space, and this is something that we continue to like from a medium-term perspective per se, Rima.
Okay, Prateek, hi. Just trying to squeeze in one last final question. Cap goods companies sounding good, numbers good, but which ones are you optimistic on, or what category, if you can give us some more color?
Yeah. So I think within the capital goods space, we have been a little bit cautious in the last couple of quarters. And the reason for our caution has been mainly owing to, cyclical headwinds of sorts per se, which is that if you're having commodity prices fall off and you're having tightening liquidity, that is not a time when capital goods do very well. Especially, given the fact that even liquidity conditions domestically are tightening and valuations in most of these spaces are not very comfortable. But nonetheless, I think from a medium-term perspective, capital goods should do quite well given government's infra thrust, and also the fact that you are having what you call PLI and a lot of those reforms coming through. But I think at these valuations, on overall industrial SPAC, we are a bit cautious. But within it, we like the leaders and the large companies, the MNC pack product companies, as well as some of the EPC companies like Larsen of sorts per se. But overall, on the industrial SPAC, from a cyclical standpoint, we are cautious. Although from a medium-term perspective, at lower valuations, I think this space can look a lot more attractive per se, Sukhpreet.
Prateek, out of time today, but thank you very much for joining in. Look forward to chatting with you once the earnings season is over and we've got a complete picture about the way forward. Thank you once again. With that, it's a wrap on Trading Hour from the entire team. Thank you for watching.